The ongoing trade tensions between the United States and China, which first escalated during Donald Trump's initial presidency, have intensified following his re-election in 2025. In February of that year, Trump imposed a 10% tariff on all Chinese imports, citing concerns over illegal immigration and the growing influx of fentanyl into the United States. In response, China retaliated with a 15% tariff on American coal and liquefied natural gas, along with a 10% tariff on crude oil, agricultural machinery, and certain vehicles. In addition to these measures, China initiated an antitrust investigation into Google and imposed export controls on critical minerals, including tungsten and bismuth. These materials are essential for various industries, and the restriction has sent ripples across global supply chains. Beyond the direct economic conflict between the United States and China, Beijing's retaliatory policies have also impacted third-party countries, notably Japan. In response to Japan's restrictions on exporting chip-making equipment to China, Beijing has threatened economic retaliation. This includes potential limitations on Japan's exports to the United States, particularly in sectors that rely on Chinese-supplied materials. Before delving into the implications of China's measures against Japan, it is important to understand its broader restrictions on critical materials and how they have affected the United States. China's recent export restrictions on materials vital for semiconductor and high-tech manufacturing have created significant disruptions in global supply chains. While these measures officially aim to limit U.S. access to these resources, they have also had an indirect but profound impact on Japan. As one of the largest consumers and processors of semiconductor raw materials, Japan is highly dependent on Chinese-supplied gallium, germanium, and graphite. The new restrictions have not only raised production costs for Japanese manufacturers, but have also introduced bureaucratic hurdles, requiring companies to obtain export licenses for materials used in products destined for the United States. The ripple effects of these restrictions extend far beyond Japan, affecting major American companies such as Apple, Tesla, and Broadcom, all of whom depend on Japanese suppliers for critical components. China has long held a near monopoly on several essential semiconductor materials, granting it immense leverage over the global technology industry. The latest export restrictions primarily target gallium, a metal essential for high-frequency radar systems, 5G telecommunications, power electronics, and next-generation semiconductors. China currently controls an overwhelming 98% of the global gallium supply, making it a strategic commodity in the midst of rising geopolitical tensions. The price of gallium has surged dramatically, rising by 23% in just 2 months, reaching $640 per kilogram. This increase is part of a larger trend, with prices more than doubling since July 2023, largely driven by heightened demand, export restrictions, and global efforts to secure alternative sources. The growing reliance on gallium for advanced technology, coupled with China's near monopoly, has heightened concerns about supply vulnerabilities, prompting countries to explore diversification strategies. China is also a dominant player in the global germanium market, supplying 60% of the world's total production. This rare material is crucial for infrared optics, fiber optic communication networks, and advanced space technologies. It is indispensable for military-grade night vision systems, satellite components, and high-speed data transmission, further cementing its importance in defense, aerospace, and telecommunications sectors. Since mid-2024, the price of germanium has doubled, driven by rising demand, supply chain constraints, and geopolitical factors affecting global trade. This price surge has significantly increased costs for industries reliant on germanium-based technologies, prompting concerns over supply stability and efforts to secure alternative sources. Graphite is another material where China plays a dominant role, refining over 90% of the world's total production. This critical resource is an essential component in electric vehicle batteries, particularly for anodes in lithium-ion batteries, which power the vast majority of modern electric vehicles. As global demand for electric vehicles surges, the importance of graphite in the clean energy transition continues to grow. Heavy dependence on Chinese graphite poses significant risks, especially for Japan and South Korea, whose battery industries rely almost entirely on Chinese supplies. Any disruption, whether due to trade restrictions, geopolitical tensions, or supply chain bottlenecks, could have serious consequences for electric vehicle production. Given the increasing global push toward electrification and energy security, efforts to diversify graphite sources, develop synthetic alternatives, and establish domestic refining capabilities are becoming urgent priorities for automakers and battery manufacturers. Tungsten is yet another critical material over which China has considerable control, producing over 80% of the world's total supply. This rare and highly durable metal is essential for aerospace engineering, military applications, and advanced machining tools. Its extreme hardness, high-temperature resistance, and superior strength make it indispensable for jet engines, armor-piercing ammunition, missile components, and precision cutting tools. With China placing export controls on tungsten, global supply chains are facing mounting challenges. Japanese companies specializing in aircraft components and industrial machinery are particularly affected, as they depend heavily on Chinese tungsten for high-performance alloys, cutting tools, and specialized equipment. The restrictions have led to increased concerns over material shortages, rising production costs, and the need for alternative supply sources. As a result, companies and governments are now actively seeking ways to reduce dependency on China, explore recycling options, and invest in new tungsten mining projects to secure long-term supply stability. China's tightened export restrictions on gallium and germanium have already had a severe impact on Japan. The country's ability to secure these critical materials has been significantly reduced, leading to mounting concerns across key manufacturing sectors. Since China imposed its initial export controls in August 2023, Japan's imports of gallium have plunged by 85%, severely disrupting supply chains. The price of gallium outside China has surged by 23% since December 2024, reflecting growing scarcity and rising competition among global buyers. Germanium prices have doubled in just 6 months, significantly increasing production costs for Japanese manufacturers, particularly in optics, telecommunications, and semiconductor fabrication. As one of the world's largest consumers of gallium and germanium, Japan is struggling to secure alternative sources, especially for its semiconductor, automotive, and electronic industries. Japan's high-tech sector, including semiconductor manufacturing, electric vehicle production, and advanced optical and communication technologies, is now facing significant supply chain risks. Semiconductor giants such as Tokyo Electron, Sumitomo Electric, and Renesas Electronics rely heavily on gallium arsenide and germanium wafers, both of which are now under China's control. Japanese automakers, including Toyota, Nissan, and Honda, are experiencing disruptions in electric vehicle battery production due to China's graphite and gallium export bans. Companies like Sony and Canon, which manufacture infrared sensors and fiber optic components, are struggling with rising costs as germanium prices soar. Given these constraints, Japan's ability to supply components to major U.S. firms like Apple, Tesla, and Broadcom is now at risk. China's new extraterritorial export control regime has added a major layer of complexity for Japanese companies, particularly those exporting products containing Chinese-sourced gallium and germanium to the United States. Under this policy, Japanese firms must now seek approval from Beijing before shipping affected products to the U.S., creating significant trade obstacles and amplifying geopolitical tensions. The requirement introduces delays, additional costs, and regulatory uncertainty, creating friction in Japan-U.S. trade relations. If China enforces strict controls, Japan could be completely blocked from exporting certain semiconductor components to the U.S., triggering severe supply chain disruptions. A senior Japanese official described China's move as a declaration of economic war, extending Beijing's influence beyond traditional trade restrictions into foreign supply chains. This policy not only disrupts Japan's industrial sector, but also raises broader concerns about China's growing control over critical technology materials. With Japan exporting $148 billion in high-tech components to the U.S. in 2023, the new restrictions threaten to choke off supply chains, leading to higher costs and potential shortages in key industries. These developments highlight the urgent need for the U.S., Japan, and allied nations to secure alternative supply routes and reduce reliance on Chinese resources in an increasingly volatile global trade environment.